Welcome everybody to the call, our weekly session with Krishak Nagar, and always excited because every week we get a layer of new knowledge added to our previous layer of knowledge. And technical analysis is what it will be, but it's more about putting theory into practice. This young gentleman is taking sessions with Krishak as well. And I am learning a lot because the way he teaches is the simplified way of teaching Forex that I've ever experienced. And he's happy to repeat. And I find that the knowledge is sticking, and then I can actually interpret what I've learned as well. So, Krishak, you teach Forex in the most simple but also exciting manner that it's making us just want to keep developing our understanding. And I know Mahir, I'm just going to add him to the spotlight as well, has also experienced your sessions. And we think that you and the way and your style is amazing. Mahir, bear with me.
There we
Should
go. Thank you for making me co-host. Yes, absolutely. I appreciate everything that Krishak has done, teaching with patience, teaching with a heart more than anything, because you can be an amazing instructor, but if you really love what you do and you enjoy teaching students, you really benefit in wanting them to learn is your primary goal, and like Krishak is, I feel that that is the best type of instruction you can have. So someone that really truly cares about learning, and he quizzes you. So if you take group classes or private classes, he will quiz you. So you got to make sure you pay attention. I'm sure Shazia, you've already experienced
Yeah.
that. You're
I've
smiling.
just opened my notebook just in case, just to remind myself again, because the things that I've been reminding myself is support, resistance, and then obviously the bullish trend and the bearish and consolidation. But the thing that I've struggled a little bit to retain was the impulse and the pullback or
We have,
correction. So
yeah,
I'm getting there.
we have a fairly small group today with Carmen and Kyler, and Kyler is he's family basically, not by blood, but through my wife. And I had a chance to speak with him a few days ago or last week, and very interested in what we're doing and diversifying outside his portfolio. And so, Kyler, thank you for being here on this call. But Krishak, or Shazi, I'll go ahead and hand it back to you. I'm going to turn off my camera for now. I'm still at work and I'm helping a few guys, so I'll be listening in and out. So we can go ahead and continue this session.
Thank you, Mahir. And Krishak, it's all over to you now because I know that we have a powerful 30 minutes. So what we like is to maximize that for everybody. So without further ado, the stage is yours, Krishak.
Thanks, Shazia. Thank you, sir. Again, it's an honor to be a part of QBN and interact with all the QBN members, all the people who are on the call right now. Thank you for joining in. Again, we're going to discuss a lot more on technical analysis. And Shazia and we're having a lot of sessions now where do discuss about support resistance, trends. I think the last topic that we discussed was more on trends, how to identify trends and so on and so forth.
It
So
was me trying to, before I was just describing the analysis, but it was tagging the correct terminology to explain. So it's been an amazing experience. And welcome, Carmen, as well, with your camera on. Lovely to see you. And I'm sure you'll benefit a lot as well.
100%, definitely. Well, it is going to be a little bit of a refresher for you, Shazia, because we're going to discuss more on trends today. Let us do a quick recap on. I'll share my screen. Just a second. I'll share my screen before we begin. Okay. I hope you can see my screen. It's a
Yes,
blank
we
screen.
can.
Okay. Perfect. Let's start with this is going to be we'll do a quick review before we move on, so we can carry forward the newer topics because all the topics are interconnected and linked with each other. So the last session we spoke about candles. We discussed about different types of candles. There are two types of candles. One is called a bullish candle, which is green in color. The other one is called a bearish candle, which is red in color. The other candle is called a bearish candle. So when we look at a green candle versus a red candle, the difference between a green candle and a red candle is that in a bullish candle, this is where the buyers are in control. So a lot of people usually buy, whereas for the bearish candle, this is where the sellers are in control. So people start to sell. This is where you see the markets go down in when there are a lot of bearish candles, and in bullish candles, you will see the market goes up. Now, there are only two entities in the markets. When we talk about entities, there are only two entities in the markets. They are called as buyers and sellers. This is how the market goes up. The market will always go up from, this is what we discussed about support resistance as well. The market will always go up from a level of support. This is also called the demand zone, where a lot of buyers are interested to buy. Buyers are usually interested to buy because support level or a demand zone, it is always at a cheaper price. Whereas if you look at the resistance, resistance is called as a supply zone as well, where sellers are interested to sell. Sellers are interested to sell. So this is how the market moves. The markets are not complex. It is very easy to understand the market scenario, very easy to understand how the market moves in a particular way, because we don't, even though there are n number of people, but there's only a buyer and a seller. There's nobody else in the markets. Let's discuss about trends. Let's talk about trends. When we look at a trend, what is a trend? A trend is the direction of the market. Trend is the direction of the market. And does trend move in a straight line? Does trend move in a straight line like this, or trend moves like this? Shazia, this is a question for you if you would like to answer.
You know, it's the second one. It doesn't go in straight lines. There will be, you'll have the impulse and corrections. So though it's going in that particular the direction is bullish, it will still be on the right, the zigzaggy lines.
This one, the zigzag line.
Yeah.
Okay. Which is the impulse and which is the correction or the retracement? If you can help me identify the
Impulse is
correction and
the one that's going the longer one, and the pullback and the correction is a shorter one.
okay, so this is the impulse and this is the correction.
Correction.
You're correct. The market moves in two waves. The market moves in waves, and the waves are called as impulse wave.
Impulse is also the impulse wave and the corrective wave.
Impulse wave and the corrective wave. Impulse wave is always the longer wave, the main direction, right? Impulse wave is always towards the main direction, whereas the corrective wave is the shorter wave against the main direction. Against the main direction or the main trend. We could also call it the main trend. And to label it right here on the screen, this wave is called as an impulse wave, the longer wave, and the shorter wave is called as a corrective wave. This is called a corrective wave or a correction, retracement, pullback, more or less, they are all the same. Correction, impulse, pullback, they are all the same. So you have an impulse, then we have a correction, another impulse, a correction, another impulse. This is how the markets usually move. The markets will never move in a straight line. And this is what we're going to focus more on, that when the markets are moving, the markets will always move in impulse and corrections. This is how different trends are also formed. This is how different trends are also formed. Let's look at a downtrend. This is another trend. The longer wave, again, the main direction, this is again an impulse. And this is the correction. This is the correction here. Correction, corrected. Um, our today's module is entirely going to be on this topic, trends. Let's try to classify. Let's look at different types of trends. Let's look at classification of trends. Now, when we talk about classification of trends, there are three kinds of trend. There's an uptrend, we have a downtrend, and then we have a consolidation. We have a consolidation. When we look at an uptrend, price creates something called as higher high and higher low. Price creates higher highs and higher lows, whereas in a downtrend, price creates lower lows and lower highs. And in consolidation, buyers and sellers are equal. Consolidation is also called as sideways market, by the way. If somebody is wondering what consolidation is also called a sideways market, where the market does not go anywhere. Let's talk about an uptrend. This is how an uptrend is formed: impulse, correction, impulse, correction, impulse, correction, so on and so forth. Higher high, HH, we'll write HH as the short form. Higher high is the resistance, whereas higher low is a level of support. To mark this on the chart, the peak that you see here, this peak, all the peaks are called as higher highs. This is a higher high because this high is higher than the previous high. This high is higher than the previous high, so on and so forth. So anytime you see a new peak being created in the markets in an uptrend, it is called a higher high. And the price corrects after a correction, you will see a higher low. Higher low is called the valley. This is also a support level. Higher low is a support level where people will start, a lot of buyers will start to buy from this point, from higher low in an uptrend, because they would like to capture the impulse wave. Never try to capture the correction wave, because correction wave is a very, very short wave. We can never predict the correction wave. Can we predict the impulse? We can definitely predict the impulse. To a point where if we buy here, looking to the left, the take profit should be at the previous peak, which is the previous higher high. So if anybody buys at higher low, if I personally buy at higher low, I would like to cash out at this point at the previous high, or a slightly above as well. It's okay. Uh, because this is an uptrend. So we always would like to follow the trend. Now, there is a saying when we look at trends, there is a saying, it's called trend is your friend
Friend.
uh, until it bends, right? Always follow the direction of the market. Never trade against the direction of the market, meaning never try to predict the corrections. Correction wave is against the main direction, right? So never try to predict the correction. Always try to predict the impulse. Impulse is something where majority of the money is made. And I keep saying over and over again in all the sessions, don't try to predict the tops and the bottoms. Make money here. The money is made in the middle, not in predicting the tops. If you miss the first impulse, wait for a correction so you can capture the second impulse. I'll repeat it again. If you miss the first impulse, it is okay. Wait for a correction so you can capture the second impulse. If you miss the second impulse, it is okay. Wait for the correction and capture the third impulse, right? You'll always have opportunities in the markets when you trade in the direction of the market. You'll always have opportunities, but the moment you start going against the main direction to capitalize on small movements, the market will humble you. Why? Trend is your friend until it bends. Follow the direction of the market. So this is an uptrend. I hope it's clear. Any doubts, folks? Let me know. Any doubts with uptrend? I don't see anything. All right, let's move on. Let's look at a downtrend. This is how a downtrend is formed: impulse, correction, impulse, correction, impulse, correction, and an impulse. Price creates lower lows and lower highs. Shadi, would you like to help me figure out lower lows and lower highs in a downtrend?
Yeah.
What is a lower low and what is a lower high?
The lower low is the bottom peak and the lower high is the top peak there. So yes, support and resistance. So support is at the bottom and resistance is at the top.
Correct. These are the support levels, lower low,
Those.
right? When we say lower lows, the price is going lower and lower and lower. When we say higher high, the price is going higher and higher and higher. New peaks are being created, whereas when we look at lower lows, we have new valleys being created after the price goes up, the price goes back down. So this is an impulse, a correction, another impulse, correction, and an impulse. Lower high,
Right.
they're called as resistance levels. This is the difference between an uptrend and a downtrend. Let me finish with consolidation, and you can feel free to take screenshots as well. Let me zoom out a little bit. Okay, perfect. So I have enough space. Let's talk about consolidation. When the markets are consolidating, price moves like this. It does not have any definite trend. The price does not have any definite trend, meaning the buyers will push the price up from a level of support, and the sellers will push the price down from the resistance or the supply zone. So when we mark this is a support level for your understanding, I'll mark this as a green candle, green zone, and this up above will be the red. I'll change it to red. Support is green, resistance is red. Um, so you can see how the price is taking support going up to resistance, and the sellers are pushing the price down. This means buyers and sellers are in equilibrium, or buyers and sellers are equal. What do we do when the markets are consolidating? We do not do anything and we stay away from the consolidation. Why? 90% of the people, 85 to 90% of the people lose money here. Nobody loses money when the markets are trending up or down, right? When gold was going up, nobody lost money when gold was going up. People are buying more and more. They were looking at profits. Majority of the people will lose money here. So it is always better to avoid consolidation. Always better to avoid. It is not a good place to be in. From my personal experience, I've taken a lot of hits just being greedy in the market, saying that let me try to capitalize on small movements as well. Or no, the market does not reward us. The market will always humble us. When we force a position, when we force a trade, the market will always humble us. So make sure that when the markets are consolidating, stay away from the trade. Do something else, right? Analyze something else. Look at something else, or read something. Look at psychology. Train your mind in terms of psychology. Look at fundamentals. This is the three types of trends. Uh, you can take a screenshot of this. Let me label it, and you can take a screenshot of this. All right. We can move on.
Mhm.
Let's look at a few examples on the chart. So this is how an uptrend looks in a textbookish example. This is how a downtrend looks and consolidation looks. Let's go ahead and look at it in the live markets. We do have some time, so we can go and analyze in the live markets. Okay. Looking at the chart right now, now the technical analysis can be utilized or used in any of the assets. It does not have to be specifically be for foreign exchange or commodities. You could also look for crypto markets. You could look for foreign exchange, commodities, stocks. I have this chart open right now, so this is the reason why we are looking at it. What is the price doing here? The price is going lower and lower and lower, right? What does it mean? The price is in a downtrend. Number one, the first and foremost thing, the price is in a downtrend. Markets are going down. This is the chart for Bitcoin. Bitcoin is going lower and lower and lower. So let me visualize, let me draw the path here. This is a lower low, a lower high, impulse, correction, impulse. This is sideways momentum. So we can say that this is consolidation where the buyers and sellers are equal. So this is how it moves. And then we have another sideways momentum like this. What you see here is price is creating lower lows and lower highs. This is how a downtrend is formed in the live markets. This is the representation of a downtrend in the live markets as we speak right now. The price is going down, and this is this is the Bitcoin chart, and you can see how price is creating lower lows and lower highs. How is an uptrend formed? An uptrend is formed like this. We'll take the same chart so it gets easy for us. An uptrend is formed like this. Higher high, higher low, 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 so on and so forth. What do we see here is price is creating a new peak every other time, whereas higher lows are support level. This is where you will be buying. This is your buying point.
Mm.
All these levels that we see at the bottom, oops, this is where we will buy. This is a support level as well. Higher low is also called a support level. What we spoke about in the previous session is higher low is a support level, higher high is a level of resistance. We buy here and we can set our take profit at the previous higher high. So if we buy from a higher low, anybody who's wondering, okay, after buying, where should we exit? Exit should be looking to the left. You take profit here at the previous peak. Because there could be a possibility that the markets can reject, the markets can go down from the previous peak. There could be a possibility like this. If you buy at this higher low, your take profit should be at the previous peak. What happened? Price reached the previous peak and then went down, followed through. This can happen, right? There is a possibility that market can go to the same peak and then go down. So to secure your profits, to make sure that we are making money, we're not being greedy in the markets, your take profit level or profit target should always be at the previous high, previous higher high, previous peak. Same thing here. If you buy at this higher low, if you buy at this higher low, your take profit or your target should be at this higher high. So you're capitalizing on the movement. Yes, you're making money here. You're not losing anything. Nobody goes broke in securing profits. A profit is a profit. It can be a small profit. It can be a big profit. But when we talk about losing money, losses should be as small as possible. We shouldn't keep compounding on our losses, meaning if we have one position open and that is going in a loss, it is going in a drawdown, never try to add to the position. Never try to double down on the position. That is more of gambling. That is not systematic trading. That is more of gambling. If you have a position open, make sure that you only have one position open or maybe two position open that max. If the first position is already in profits, then you can add more risk to it. That is more on risk management. This is what we teach again in one-on-one, the group sessions discussing about risk management, how to capitalize on trades, how to keep compounding your $1,000, $5,000, $10,000, whatever amount that you start with. This is what we discuss. But a general perspective of the market is that market will always move in three directions: up, down, and sideways. Capture the upward movement and the downward movement. Avoid the sideways movement. Avoid the consolidation. Let's take a quick look at consolidation. We have consolidation right here. This is a level of resistance at the top. And this is the level of support right here. Let me make this as green. This is a level of support. What you see here is you see the markets consolidating, right? You see markets going up, down, which means buyers and sellers are equal. This is what it means. The buyers are pushing the price up from here, from the bottom, sellers are pushing the price down. So I hope this is clear. Always avoid this market because a lot of people lose money here. So try to capitalize on an uptrend or in a downtrend that we looked. Where is it? There we go. Never try to trade the consolidation movement. Any doubts, folks? I think we have 3 minutes. We can take a quick Q&A session if anybody has any questions.
I was just going to say it might be helpful to mention the when we're analyzing or when we're analyzing the trends, which time frame to use.
That's a very good point, Shazia.
I do
When
listen
we
to my lessons.
definitely 100%, when we analyze the trends, we always look at the daily time frame or we look at the higher time frames. We call them higher time frames. We always look at the daily, the 4 hours, the weekly. It doesn't make sense to look at the monthly time frame because each and every candle on the monthly time frame is for an entire month, open for the entire month. But to analyze the direction, impulse and correction waves, the best way to identify a trend or impulse and correction wave is always on the daily time frame. What does the daily time frame mean is each and every candle on the daily time frame is open for 24 hours. If it's FX, if it's foreign exchange, if it's commodities, crypto, it's open for 24 hours. If it's stock market, it's open from 9:30 a.m. Eastern to 4 p.m. Eastern. So the daily candle is open for the entire day, shows the movement as to how the price has moved during the entire day, during the trading session. Uh, that's a very good point, Shazid. Thanks for that. And any doubts? We can take the doubts. Or Shazi, if you would like to add
No,
anything,
I
or
was
if
just going to say one more point just to remind everybody the difference between the day trading, intraday, scalping, swing trading, just so that it kind of holistically closes the topic, because I know this is the fourth topic out of the group of four that we were doing.
sure. What there are three types of trading. When we talk about trading, there are three types of trading. One is scalping, day trading, and then we have swing trading. Depending on your goal, depending on whether you wanna be trading in the fast moving markets, that comes in scalping, where you're in and out within few minutes to within few seconds to let's say within few minutes, right? You're in and out within few seconds to few minutes. It's a very fast-paced market. So you look at the lower time frame, the 1 minute, the 3 minutes, and the 5 minutes. Whereas for day trading, you take 1 to 2 trades a day, 1 to 2 trades a day, and you enter in the morning and exit when the market closes, or you hold the position for a few hours, I would say, right? You're in the markets for a few hours. You're in a position for a few hours. Whereas for swing trading, it is a few days to few weeks. This is something which has higher probability and which has higher probability and less chance of being stressful because you're looking at the higher time frame. You're trading on the higher time frame. So, and you're not taking more than 1 to 2 trades a week. You're not taking more than 1 to 2 trades a week. So this is the best. If anybody who's starting trading, swing trading is the best approach for anybody who's starting. So you're looking at the higher time frame. I do see a question. How do we identify a fake breakout? Very good question, Said. A fake breakout is always, see, when we talk about fake breakout, we always look to identify support and resistance first, right? We'll take the same example since we already have support and resistance marked. This is a valid level of support, right? Because this was where the support level was initially created. Price goes up, this is a fake breakout, meaning a fake breakout always happens against the direction of the market, right? So if the market is going up, you will see the fake breakout happening at the support level. How to avoid? Wait for the market to break out, do a retest with a bearish engulfing candle, and try to capture this movement going down. So it's okay if you miss the first wave. This is what I was discussing when we started the session. It is okay to miss the first wave, wait for a correction, and then you can, after a confirmation, after a bearish engulfing or evening star or any candlestick pattern, you can capture the downward momentum, and this is how you avoid a fake breakout. I'll give you another example real quick. This is another level of support. This is a fake breakout as well. The market did not retest. There was no retest at this point. Let me zoom in. The price broke below the level of support, but there was no retest. This candle closed back in the range. So the fake breakout happened and the market goes up. We have another fake breakout here. So always wait for the retest, meaning support turning into resistance, resistance turning into support. So that is the role reverse. Any doubts, folks?
No, I think that's been very helpful today. So that brings us to the end of our 4-sequence series, right, Mahir? So I'm going to bring Mahir back onto the spotlight to close with Krishak.
All right, fantastic presentation and instruction as usual. Keeping something complicated at a very basic level, and that's a talent as an instructor. So great job, Krishak, as always. I see a few people on this call, a few more than when we started. We have that group call. We have that group session of 4 people, remember, for $25. And we have that one-on-one sessions as Shazi and I are both learning on one-on-one with Krishak. Again, an amazing job from an amazing instructor. And congratulations on your accomplishments, your certifications. And I know that you're always continuing to enhance and improve. So VIP 5-star quality service from Krishak. Thank you again.
Thanks a lot, sir. I appreciate
Thank
it.
you
Thank
everyone
you.
for being on this call. Thank you, Shazia, for hosting today. And look forward to seeing you guys next week, correct?
Thank you.
Next week. Thank you. See you,
Fantastic.
folks.
Everybody have a great day. Bye-bye.
Bye-bye.